third installment minus interest, add second installment minus interest, add first installment minus interest, add down payment. That's a procedure. High seller account data, cash or bank account for division account data to asset or transfer entry, profit and loss account data to interest account to division account. 5% is 1,000, installment is 8,200, minus 1,000 gone, it becomes 7,200. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. BSS, Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting second semester, Unit 2, Session 3 of BCom in favor of accounting for hire purchase. In the last session, I already told what is hire purchase. It is nothing but a credit purchase. There are two parties. One is the hire seller, one is the hire purchaser. When the hire purchaser pays the down payment, automatically the goods transfer from seller to the buyer, but the legal ownership lies with the seller till the last installment is paid. Each installment includes the interest. This is important. Goods passed from seller to the buyer on the date of the down payment, but the legal ownership lies with the hire seller till the last installment is paid. Each installment includes the interest. That is very important. Then, if the purchaser fails to pay any one of the installment, the seller has got a power to take back the goods. Or, if the hire purchaser wants to discontinue whatever he has paid because he is not in a position to pay the amount, he can forfeit the contract and say that whatever the amount he has already paid, ask the hire seller to pay back. There is only an agreement between whom? Hire seller and the hire purchaser. So what are the common journal entries are in the books of hire purchaser? First entry, asset account data to hire seller account. Second entry, hire seller account data to cash or bank account. Third entry, this is the beginning of the year. Then interest account data to hire seller account. First installment, high seller account data to cash or bank account. Then depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation account. This goes in favor of first year. When you start with the second year, the entry will be interest account data to high seller account data to cash account, depreciation account data to asset account, profit and loss account data to interest account to depreciation account. So it goes only, the number changes, the entry remains the constant. Hope you understand. So we'll move on. This is a problem. On 1/1/2001, Mr. Mohan purchased a scooter from Vespa company on hire purchase basis. Payment to be made rupees 10,000 on the said date, that is 1/1/2001, and the balance in 3 yearly installment of 8,200, 7,440 and 6,300, which includes the interest. This is very important. In the last session, I told you it's a plus interest, but here the amount includes the interest. Now, you have to bifurcate from the installment minus interest is equal to principal money. What's the law? Installment minus interest is equal to principal money. What's the rate of interest? 5%. Purchaser closes the book annually on 31st December and provide depreciation at 10% per annum on reducing balance in each year past journal entry in the books of purchaser. So here interest includes mean, you have to say that word rate divided by 100 plus rate. This is important. Your rate is how much? 5 divided by 100 plus 5. This is 5 by 105. This is the method when the interest already includes the interest, means if there is a 10%, 10 by 110, if it's a 12%, 12 divided by 112, if it's a 10%, 10 divided by 110, if it's a 5%, 5 by 105. So this is the method of calculation of interest. We'll move on. See, calculation interest and cash price. On 31st December, how much he paid? 6,300. So third year, second year, first year. Reverse order, third year, second year, first year. How much he paid in the third installment? 6,300. I told you 5 by 105, it will come 300. 6,300 minus 300 gone. Will be see. What's the method now? Third installment minus interest, add second installment minus interest, add first installment minus interest, add down payment. That's a procedure. It's a procedure. Third installment minus interest, add second installment minus interest, add first installment minus interest, add down payment. That's a procedure. What is the third installment? 6,300. Interest 300 gone. What's the balance? 6,000. 6,000 plus second installment 7,440. It becomes 13,440 into 5 by 105, 640. 13,440 minus 640 is 12,800. In the third installment, 12,800 plus 8,200. So 21,000. 21,000 to 5 by 105 is 1,000. So this is 20,000 plus down payment of 10,000. That is a 30,000 is a cash price. So what's the value? Cash price. So it's 20,000 plus down payment 10,000 is equal to 30,000. No interest to this, totally 20,000, cash price 10,000 down payment, totally 30,000. We'll move on to problem now. So on 1/1/2001, how much he paid? 10,000. No installment for this, no interest is there, nil. Then second installment, how much he pays? No installment, 8,200. On 20,000, here on 20,000, 5% is 1,000. 8,000 minus 1,000 gone. It is 7,200. Deduct 7,200 here. What's the balance? 12,800. On 12,800, 5% is 640. 7,440 minus 640 is equal to 6,800. Deduct 6,800 here. What's the balance? 6,000. So last installment 6,000 here. So 6,000, we paid the cash price 6,300. On that 5% is 300, deduct 6,000. Totally cash price comes to 30,000. Interest is 1,940. Totally they paid 31,940. So 30,000, down payment is 10,000. No interest at all. Come back 20,000. On 20,000, 5% is 1,000. Installment is 8,200. Minus 1,000 gone. It becomes 7,200. Deduct, it becomes 12,800. Second installment, 7,440. 5% of this is 640. Deduct 6,800. Deduct 6,000. 5% of this is 300, 6,300, 300 becomes 6,000. This is your cash price. This is the method of calculating the cash price. Then we'll pass the entry now. Journal entry in the books of Mr. Mohan, who is a purchaser. First entry, scooter account data to Vespa company, nothing but asset account data to Heisler account. What's the cost price? 30,000. How much is the down payment? 10,000. Vespa company account data to cash account. End of the year, interest account data to hire seller account. That is interest account data to Vespa company account. 1,000. Then he pays the first installment. 31st December 2001. Vespa company account data to cash account. Then depreciation of that year, 10%. Depreciation account data to scooter account, 3,000. Then transfer entry, profit and loss account data to interest account, to depreciation account. This goes in favor of first year. Then second year, interest account data to hire seller account. Then Vespa company account data to cash account. Second installment, depreciation account data 2,700 to scooter account 2,700. Then transfer entry, profit and loss account data to interest account to depreciation account. So third year, start with interest account data to hire seller account, Vespa company. He pays that installment. Vespa company account data to cash account. Then depreciation account data to scooter account. Profit and loss account data to interest account to depreciation account. Very, very easy. But only thing, no interest you have to calculate here. What's your cost of the machinery? Cost is equal to 30,000. Depreciation minus depreciation 10%, 3,000. Balance is 27,000. Balance on this minus depreciation. This is for first year. 2,700 deduct 27,000 minus 2,700, 24,300. Balance minus depreciation 10%, 2,430 deduct 24,300 minus 2,430, 21,870. Balance. This is for first year, this is for second year, this is for third year. Diminishing balance method. If it is a straight line method, every year depreciation remain constant 3,000, 3,300. Here in the method now, cost minus scrap divided by life year. So depreciation percentage is given. First year 3,000, second year 2,000 that have been shown here. First entry, asset account data to high seller account, high seller account data to cash account down payment, interest of the year, interest account data to high seller account, high seller account data to cash account, depreciation account data to scooter account, asset account, transfer entry, profit and loss account data to interest account to depreciation account. Go to second year, start with interest. Interest account data to high seller account, high seller account data to cash account, depreciation account data to asset account, scooter account, transfer entry, profit and loss account data to interest account to depreciation account. Last year, interest account data to high seller account, high seller account data to cash account, then depreciation of that year, depreciation account data to scooter account, transfer entry, profit and loss account data to interest account to depreciation account. Hope you understand. What are the entries are? Asset account data to high seller account data to bank account or cash account, this is down payment, interest end of the year, interest account data to high seller account data to cash or bank account, then depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation account. Go to the second year, interest account data to high seller account data to bank account, then first entry, interest account data to high seller account data to cash or bank account, for depreciation account data to asset account, transfer entry, profit and loss account data to interest account to depreciation account. Every year it goes on like this. Very, very simple entries you are going to pass and just fill up the blank. So hope you understand. We'll have a class in the next session, some more problem of installment problem. Till then, goodbye. Meet in the next session.